So it's a clean win-win business. The clients are being introduced, which makes the company save in marketing. And instead of paying, as you said, the booth, for example, the expos, so you just have to pay the partners a part of the income of the company. But you mentioned something really important. You say you have traders that they are with you for over 5 years, maybe 10 years, some partners, 5 years, 8 years. We've met some of them from Far East to Latin America. My question is that since for the past 15 years, you had access to a quite strong data from those traders, maybe thousands, tens of thousands of traders, small amounts, big money from all over the world. What can you tell me about losing traders, the losers? What do they have in common? If you would have now to give your experience on the trading, on the trading side now.
I will say it's, I mean, in terms of pattern of trading or in terms of behavior?
Trading, whatever you want. What will make them the common traits that they have that make them end up losing?
I mean, let's say it's. I will not order them, let's say, as a priority, but what comes to my mind? One is definitely wrong money management. Why they lose?
Number one reason.
Not number one. I will give you, let's say, my main reason. Let's say money management, let's say not followed, or then which goes with the money management, leverage. We offer a lot of leverage because we have a lot of clients that they want a lot of leverage, but our leverage is dynamic. So bigger your exposure is, less your leverage goes. So it goes like this. Then, but nobody is obliged to take that leverage, right? I mean, people, they can trade. Then is this pattern always to take small profit and let it run, let's say, the losses. I'm telling you this story. I knew an old trader, and he was telling me, Nicolas, when you trade and you have your strategy and your pattern, the most difficult is not to open a position, is to close the position, and even the worst is to close a position with a loss. And each time you do that, open a bottle of champagne because you are really a man. He said, is where it's the most difficult to do. I mean, to close a position with a loss, but closing a position with a loss, it means a lot as a trader, and is where you can see really fast the pattern. After there are other factors, durations of the trades, let's say, this. But I will say money management, leverage, let's say the strategy to take really fast profit and let it run the losses. Yes, these are for me, let's say.
Accepting your losses, having a good risk-reward ratio. So risking a certain amount, but...
the management is how much you want to risk, let's say, on an exposure. If you have 10,000, you trade with 10K. If you say, I want to lose maximum 10% in one trade, so mathematically, in 10 trades, you are out. So now if you say, I want to lose maximum 2%, but during the day, no overnight, or on major, because they have a second fluctuation, already you reduce it. I mean, it's not 10 trades, it's 50 trades, right? So then it's just statistics and mathematics. But you need to follow after where people is always the emotions that counts, let's say, and goes, let's say, to break all the strategy. That's why people, they say, when you are not too much experienced, you read, you try, you test, and so on.